Bitcoin price outlook in 2030 with every reason and microeconomic facts. This will be the right way to think about Bitcoin. Not number go up, but what economic forces will exist in 2030. We will look into a realistic price range first, then get an explanation on why using actual microeconomics, such as supply-demand behavior, incentives, network effects, game theory, capital flows to determine the price outlook for 2030. This video is for educational and entertainment purposes only and should not be considered financial advice. I am not a financial advisor. Always do your own research before making any financial decisions. First, a realistic 2030 price range will be given as follows. No one honest can give a single number. Bitcoin is a probabilistic asset, using institutional research, valuation models, and macro assumptions. The price range for bear case will be between $60,000 to $150,000. The price range for base case will be between $200,000 to $350,000. The price range for bull case will be between $400,000 to $750,000. One large asset manager model estimates around $275,000 by 2030 under normal economic conditions. Some adoption-driven forecasts even extend to $400K to $500K. We will explain why these ranges actually make economic sense. The microeconomic core. Bitcoin is a supply-fixed commodity. Bitcoin is not a company, not a currency in the classical sense. It behaves closest to a perfectly inelastic supply commodity. Maximum supply is 21 million coins, fixed forever. And in economics, this means supply curve is vertical. No matter how high price goes, the production cannot increase. This is radically different from oil, housing, or gold. If oil price goes up, oil companies drill more. If rent goes up, builders build more houses. If gold goes up, mines expand. Bitcoin simply cannot do this. The halving shock, scarcity mechanics. Every 4 years, new Bitcoin production drops 50%. In 2024, mining reward was 3.125 BTC, but in 2028, mining rewards will be 1.5625 BTC. This means new supply keeps shrinking while demand can grow. In microeconomics, when supply is fixed and demand rises, price must rise. It's not hype. It's literally the same mechanism as rare art or Manhattan land. Demand side. This is what really matters. 2030 driver. Bitcoin's price is determined almost entirely by demand curves, not production cost. And the demand curve is changing structurally. Number 1, institutional capital, the biggest factor. We crossed a historic moment in 2024. Bitcoin ETFs allowed pension funds, banks, and sovereign funds to buy. Institutional inflows already exceeded 7 times more than new mining supply. ETF inflows even matched all new coins produced after the halving. Microeconomic implication. This is a persistent demand shock and why it is important. Because institutions behave differently from retail investors. Retail is speculative. Institutions are allocation-based, slow, steady. In portfolio theory, large funds allocate 1 to 5% to alternative assets. Even a tiny allocation matters. Global financial assets approximately hundreds of trillions USD. Bitcoin market cap is tiny compared to that, so a 2% portfolio allocation globally means massive price impact. 2. Stock-to-flow ratio, hard money economics. This is a commodity valuation concept. Stock equals the total existing supply. Flow equals annual production. Gold is valuable because new gold production is small relative to existing. Bitcoin's stock-to-flow increases every halving, making it scarcer over time. Economically, it becomes increasingly similar to a monetary metal. That's why models compare Bitcoin with gold. If Bitcoin captures just a share of the hard money market, its price rises as monetary supply expands. 3. Liquidity scarcity, important and under-discussed. Not all 21 million coins are actually tradable. Large amounts are lost, cold stored, or long-term held. Companies and institutions are withdrawing coins from exchanges, reducing circulating supply. Economically, this shifts the effective supply curve left, making the price increases even without new buyers. 4. Monetary economics, inflation hedge. Why Bitcoin exists at all. Fiat money supply expands over time. If money supply rises while Bitcoin supply doesn't, then each BTC represents a larger share of global purchasing power. Models explicitly link rising global liquidity to higher Bitcoin valuation. This is the same reason gold historically appreciated over decades. Risks. Why Bitcoin might not reach 300K. These matter just as much. 1. Regulation. Hostile government policies can suppress demand. 2. Competition. Ethereum or future protocols could attract transaction demand. 3. Macro cycles. Past crypto winters had 84% drawdowns. 4. Technology risk. Security or cryptographic breakthroughs like quantum computing fears. Evidence-weighted conclusion. If current structural forces persist, most economically defensible estimate for 2030, around $200,000 to $350,000 per BTC. Why? Because only a small share of global capital needs to move into a fixed supply asset to justify that valuation. Bitcoin isn't priced by utility, it's priced by scarcity plus capital flows. Hence, our estimated Bitcoin price in 2030 will be within the range from $200,000 to $350,000, depending on market sentiments, global outlook, and regulations.
If you like the information given in this video, please do not forget to like and subscribe. We will try our very best to dig up information for gold, ETF, and cryptocurrency forecast. Thank you.